let's welcome in Sunil Subramaniam onto the conversation this afternoon. Sunil, great to have you on the show. It's
Hi,
been a
good
good
afternoon.
day. It's been a good week. But markets have almost, I think they've assumed that this is a done deal, that we are not going back to the previous hostilities in this war. Would you concur with the market view?
But I'll tell you what's happened, and I've been studying this data a little bit in detail. So I think two things. That one is that you see, I think the oil price at about 95 to 100 has been kind of absorbed by the market as something that's going to happen, and that the correction already takes into account that. That's number one. Number two is that I think the market reads the fact that now the pressure is on America to end the war. So while there are hitches, as you very beautifully pointed out in your initial summary, the fact of the matter is that with gasoline prices rising 30 to 40% in the US pumps, Trump's popularity rating going down, the fact the war has been very expensive so far. They've asked for a $200 billion budget from Congress to meet. So clearly, I think America has kind of underestimated the power of Iran to last it. And I think they want a quick win and a way out. And I think if you look at it, then when you come to the negotiating table, Iran may put up some 10 points, America may put up 15 points. The fact of the matter is that they'll all seek a fig leaf to walk away saying we won this war. And I think that from that point of view, though there are hitches and Israel still attacking Lebanon and all of that, I think the market senses that America is now a bit tired of this war and wants to walk away saying, hey, we achieved our goals. Okay. So I think that's the sense in the market. That's why, despite oil prices being at 97 and dollar index still being around the 98, 99 marks, it's the market is saying, okay, the worst is behind us. That's second. The third is I was interestingly observing some behavior. So first is you talked about today, not just today, even for the week. The surprising thing is that the mid and small cap so have outperformed the large caps in terms of performance. So that what is that? That's indicating that retail is actually now supporting the market in a significant way. And when I say that, this is also borne out by the AMFI numbers that came out today. We've had a sharp, almost 40,000 crores of equity inflows this month. And people have actually reduced their, whatever balance advantage fund and gold and silver and put more into flexi caps, mid caps, and small caps. So the Indian retail consumer, right, the investor, is kind of showing a great deal of resilience and now is probably feeling there's a lot of correction. From a 5 year, 10-year average, markets are looking much more reasonable and they are starting to support the market. That's why the broader market is outperforming the larger cap. And one more point, then I was looking at the FII flows. And if you look at the FII flows right from the beginning of April, see, they was very sharp. They were selling 8 to 9,000 crores per day. But that's over the last 2 days, it's come down to about 2,800 crores the day before. And yesterday, it was just 1,700 crores. And this decrease in selling is the actual fact is that the buying also has stepped up. If you see the gross minus net is what these net numbers are. And I was looking at that data. And if you look at it from the beginning of the week, it's about 18,000 crore of buying by the FIS at the beginning of the week and 26,000 crores of selling on that day. So net negative. But if you see that closer, 2 3 days back, it was only 8,000 crores buying. Then it became 19,000, and yesterday it was 15,000. So believe it or not, of the total 32 33,000 crore of FIF activity, 15,700 crores was buying and 17,400 crores only was selling. So you can clearly see the FIs also have kind of felt that India has now discounted the bad news is in the price. They're stepping up their buying within the FI group, and the difference between the buyers and sellers is now down to what, 10%. Whereas historically, this year, it's been at about 35% buyers and 65% sellers. And that net 30% is what was hurting us. So there's a change in the behavior of the FIS too, that India is a little bit oversold. And DIS, unfortunately, actually, DIS haven't been the responsible for this rally because they have sharply brought down their net purchases. You saw those numbers, right? So DI numbers, they were
Yeah.
buying 7,000 crores a day in the first 3 days of April, 4 days. Last 2 days, they bought 4,000 and then only 955 crores yesterday. So retail plus FII. They are the ones which have driven the market, and hence you can see the indices are also following that. The small and mid cap indices are outperforming. The bank indices are doing well because FIs naturally have a big stake in the bank because of its weightage in the index. So I think that's my read of the market, that in a sense, the market feels the bottom has been found. Market means large numbers of retail investors and the FIIs. DIs are probably keeping some firepower and gunpowder for the earnings season because they want to talk about which is going to do well in the next 2 to 3 years based on the guidance and all of that. So they're probably keeping their gunpowder dry. And that gives me hope that as the earning season plays out, DIS should
Hmm.
start coming and further support the market. So very interesting set of statistics that I was, able to access.
Yeah, I know, absolutely. And just another question on the mutual fund numbers, because Sunil, that's been really, really heartening to note, right? And it
Yeah.
tells us that we've come such a long way. Earlier, when the market would fall, you would talk about redemptions and funds not getting flows. This is completely different. When the market is down, equity funds have been flushed with money, and investors have handed over 40,000 crores to equity fund
Yes.
managers to deploy in this market. On that question, what's your sense? I mean, there was a point in time where mutual funds were generally sitting at slightly higher cash levels. What would the kind of cash levels be across the industry now? So this additional firepower that's coming in, would you? I'm not sure if all of it got deployed immediately in the month, or should we expect greater buying by funds looking at this kind of inflow?
So two things there. I think the cash balances are definitely down because last month they bought 1.45 lakh crores. And if you look at 30, 40,000
Hmm.
crores of inflows for DMFs and insurance buying a bit, maybe it's clearly they've drawn down the cash balances. My sense is from about 5%, they are down to about 3.7% levels in the industry. Okay. But
Okay.
this additional 50,000 crores plus maybe insurance would have got some flows too in March into the ULIP schemes would give a firepower to play. But when the DIs actually now start buying, when the earning season is well upon us and they know which sectors to buy, there will be sector rotation. So I would say that overall,
Hmm.
some sectors will do much better based on how the earnings guidance is. And on the earnings also, I just want to make a quick point here. That is that the actual earnings will not look great, but that won't matter to the market because they've already discounted. Every analyst sitting there has said, okay, this paint company, this is his total petrochemical inputs, this is the cost price rise, this is how the earnings will come down. So the consensus itself has come down.
Yeah.
So unless a company is going to
Yeah.
disappoint in earnings beyond the consensus, that is drop in profits much more, they are not going to get
Hmm.
disappointed. But it's the guidance for the future that will drive a sectoral allocation. So I expect a lot of sector rotation, but definitely this is heartening news that the retailers are continuing to support, and hence mutual funds will also be strengthened to commit more money into the market.
No, absolutely, absolutely. So let's do one thing. Let's take a look at now what's happening in the mid cap market. I pointed out some of the major trends on the large cap, screen. Mid caps, and there's a lot of excitement here as well, and a diverse section of stocks which are really fired up. Look at something like a New India Assurance. Look at Ola Electric. Ola, remember yesterday it was one of our hot stocks yesterday because now the company is, lithium ion cell is finally ready, and the market's getting excited that it's going to sort of maybe drive down cost of production. That is eventually the cost of vehicle itself, and then drive more penetration. So Ola Electric is up about 13%. Allied blenders, and I'll come to our hot stocks in just a second because that is one of our hot stocks as well. That's doing very, very well. There's Blue Jet Healthcare, Bajaj Consumer, so many names which are having a really, really good session today. And if I talk about some of the top volume trades, then you have names like Ashok Leyland, IRB Infra that's standing out. IRB reported very good toll collections, more than 20% growth in toll collections in March. That stock's up about 4% at this point. NCC is also tracking gains. And then, of course, a whole host of financials. I can see Bank of India, Federal Bank on the screen where the price is up and the volumes are also fairly high. So that's how it's shaping up for the timing. Okay, before I get to today's hot stocks list, Sunil, what have you made of the massive rally in financials? I mean, this week, the bank nifty is up almost 9-10%. Actually, private banks have done better than PSU banks, but we're talking about gains between 8-9% on these indices. So, I mean, it's really something. And even non-banks, I mean, NBFC stocks, let's just see what, for instance, a Shriram Finance would have done this week. It's been a fantastic week for Shriram. Yeah, 16% up on Shriram Finance. So really, really big gains coming in over there. What is the premise? And now with this very sharp pullback, again, we ask the same question that are the valuations still leaving some comfort, some headroom to go ahead and make a fresh purchase in large financials?
I think so. I think that one of the things that's driving the banking thing is that end of the day, RBI policy, while it was neutral in terms of its outlook and didn't change the rates, I think the governor was very clear that if situation permits, they would keep interest rates low try to keep them low for longer. Like one of the press questions, he answered it specifically in that manner. So a proactive and a preemptive RBI, I mean, he used that phrase. So I think that's kind of lifted a cloud, saying that is a interest rate hike on the anvil, which was there in terms of the minds of people in the RBI policy. I think that cloud got cleared, number one. Number two is the fact is that all the pre-data to the earnings season of the banks showed a very strong credit and deposit growth. So private sector banks, in fact, showed around 10 double-digit deposit growth, and it was a public sector banks which had a lower deposit growth, and credit growth is outpacing deposit growth. Now, in such a scenario, two things happen, right? One is that you have the net interest margins will actually benefit because fresh loans will now be made at higher rates, because when credit demand is higher than deposit, then the seller, it's a seller's market, right? It's the bank set the price. So that will be very good for them. Second aspect is that this summer, again, from a consumer durable perspective and all of that, the GST cut will truly play out here. Only in auto it did play out. So all those are financed through EMIs, and the private sector banks are the leaders and the NBFCs in terms of lending. So you should see a huge pickup in discretionary financing during the current summer months, which is very good. The third is, of course, the health of the banks. I think the NPA levels are at rock bottom levels. The governor also mentioned specifically that the health of the banking system is in very good shape. So I think these kind of reinforces. And when I talked about the FIIs, that the selling has come down, and I said that gross buying has also stepped up, I suspect that that's also been in the banks, because that's 35% of the index. No FII, if he's buying in India, has to buy a significant amount of banks. So all of this put together is making the situation good for banks, and I don't see a challenge. See, some days ago, before this week, there was some pressure because the interest rate cycle was turning up. But after the policy, interest rates had shot up. 10-year GSEC was at 7.11. It's back down to 6.95. So clearly, again, the negative of that now has to roll back into a positive, because RBI policy has actually helped in bringing down the rates at the long end of the curve from a sentiment perspective. So all of these add value there. So I would say that definitely banks are something which suffered during this geopolitical crisis sheerly because of their weight in the index. Otherwise, their business is not really affected by the petrochemical crisis, right? So to that extent, the bounce back should also be strong when it reverses.
Yeah. Okay. So it seems to be justified. That's the view from Sunil. Okay. Let's also add technicals to our conversation this afternoon, considering it's been such a huge week for the market. We have Nilesh Jain, who looks at derivative and technical research at Centrum Broking, who's joining in. Nilesh, hi. Good afternoon. What a week! Bulls roaring back on the screen and on the street. What do you make of it? And let's start with levels first for the Nifty. How are we poised now at near 24,000?
Very good afternoon to you, Surabhi. Absolutely, what a fantastic week we had so far, and this is one of the best week in terms of gains in last 4-5 years that we have seen. The Nifty, which jumped around 6%, and we have seen a lot of short covering move coming in this week. And still, I think there is a lot more left on the upside, and we can expect another round of short covering rally towards 24,300, 24,500 in the coming week. We did see a big gap up opening, and Nifty was facing resistance at 24,000, but today it has decisively taken off that 24,000 mark. Seems like we'll have a good close about 24,000. So we are expecting a follow-up to continue on the upside towards 24,300, 24,500. And the base is likely to shift higher at 23,800. Another positive development that we have seen in this week is that a sharp cool off in the IVs. The VIX have corrected close to 26%, and it is right now below 90 levels. So that's another comfort that we are getting for the bulls in terms of cooling off in the IVs. Another space that's Bank Nifty we are keeping an eye on, because we expect a Bank Nifty to outperform from here, and it is likely to test is 200-day long-term moving average, which is placed at 57,300. So we are expecting a further momentum to continue in the banking space, and immediate target would be 56,500 followed by 57,000, and support has shifted to 55,300.
Okay. All right. Got that. Just stay on. Let's very quickly run through today's list of hot stocks. And we pulled out three. I mean, there are lots of stocks that are really excited in the market today, but three really stand out in terms of news flow. And I actually want to start with Sun Pharma very, very quickly. Now, why has Sun Pharma been sulking all through the day when the market otherwise has been so buoyant and in such a good mood? Even now it's down about 3.5%. Well, there's a lot of chatter in the market that Sun could be looking at a very large acquisition. And the worry is that it could be as large as 10 to 14 billion dollars, and the target entity is Organon and Co. This is formerly what used to be part of Merck, the pharma major, and it's a company that is specializing in women's health, and it produces biosimilars. So the worry is the usual that we see with big M&A, that will there be too much debt? Will it be, Sun Pharma overpaying for this asset? Will it really add to earnings or not? Because by some calculations, the expected deal size, if it's as big as this, could be 1/4 of Sun's own market cap. So it's a really big one that we're talking about, and that's weighing on the stock. But coming to happier times, Eicher Motors, their EV motorcycle offering is getting the street quite excited. It's called Flying Flea C6, priced at 2,79,000 rupees for those who would be interested. And finally, since it's the weekend, so let's talk about some beverage companies as well. Allied Blenders has had a really good session. It's a smaller stock. It's a mid-cap stock. Don't usually talk about it, but it's in a lot of news today. That's because they're offering a new brand of gin. This is Zoya Pink Mixed Berries Gin. So why is the market so excited about it? Because this seems to be Allied Blenders' way of going up the premiumization scale. And the market has typically seen that when there is premiumization, earnings improve, and then the market starts rewarding those stocks and those companies. The pricing of this particular one is going to be 2,500 rupees per bottle in Maharashtra. So the market feels that this could drive a new leg of growth for Allied. So those are three stocks we thought we'll pull out and talk about specifically. On Sun, let me quickly ask Nilesh. Nilesh, Sun down 3.5%, and actually even Coal India, two of the Nifty's weakest stocks today on a good day. What are the charts indicating?
Well, as far as pharma space is concerned, we expect some consolidation to continue. And within this space, I believe Sun Pharma is likely to underperform. And we expect this consolidation in Sun Pharma as well to continue. It is facing constant resistance at 1750. And we expect it to move towards 1620 to 1600 on the lower side. So today we have seen a price and volume breakdown with a good OI addition. So good short buildup is happening. Close to 10% OI has been added today. So clearly a short build-up candidate, and we expect selling pressure to continues to remain at the high level. So it's an avoid taking any contract for the timing within this particular counter. On the other hand, Coal India, we did see an outperformance in the previous few trading session on the back of rising crude oil prices. But since the prices have cooled off and the oil upstream companies have certainly feeling the heat, and Coal India, ONGC, Oil India, all these stocks are moving sideways to down. So again, another stock, another space that one can avoid for the time being. But if somebody is looking to make an investment from a longer term perspective, I think dip can be used as a buying opportunity. But purely from a trading perspective, it's an avoid.
Okay. So very quickly, we're down to the last 3 minutes before today's trading session ends. Sunil, your take on Allied Blenders, this Alcobev space. In the past, some of the stocks like Radico have done very well over here. What's your sense? Would you be a buyer?
Alcobevs, yes, because it's the summer and it's beer time. So hot summer is good for that. But also the premiumization story, I think that's something that will play out well. Though they are actually sin goods. And so I think from a GST perspective, they've probably been hammered. But I think it's also insensitive to prices, right? That's why it's a sin good. So they are inelastic to prices. So demand shouldn't fall just because of those price hikes. So overall, I think it's a good part of the discretionary consumption story.
Okay. And finally, before we let you go, Sunil, we haven't discussed IT. That's been the big talking point today, right? TCS. Now, what did you make of their commentary? And the fact that growth is hard to come by. I mean, it's 1.3% growth. It's not much to really celebrate, right?
No, I think that it is definitely, while the margins and all have been protected, it's definitely because it's a bellwether, it's hurting the IT sector itself from what it's saying. And also the second is, I think that some more stronger stuff around the AI stuff has probably been expected, right? See, that threat is there hanging like a, a triple sword. And every company is now duty bound to actually give a very strong statement on AI. And if you duck it, it doesn't go well. I think IT, so what's happened is that it's like it's there, but nobody is recognizing it. And that's one of the worst things to happen to a sector. And so what has happened is that I feel that
Mm.
IT has now moved from a growth oriented sector to a value sector. So you have good cash balances, good dividend yields, decent growth rates, a rupee
Yeah.
weakening which supports them. So they are parts of now value portfolio. So there'll be a churn in the market because those who held it as a growth component will naturally pare it down to what value should have in their portfolio. Value investors will of course buy.
Mm.
So there will be support. It won't crash very much. But for you to really see an uptick in IT companies, I would say they need strong AI related statements, either acquisitions or investments or something like that. So I think that's the key.
Yeah.
Messaging is more important in IT than the actual numbers today.
Okay, on cue there, just getting into market close. Sunil, thank you so much for being with us
Thank
today. You
you.
have a great weekend, and
Thank you.
we'll
Same to
connect
you.
again soon. Okay, before we take more trades and understand how we should place our bets for trade next week,